Are we adequately pricing in how big the economic surge will be in the United States?
Well, Lisa, it's going to be big. And we're living in an unprecedented economy. That was true on the downside, and that's going to be true on the upside. This is going to be a recovery like something we haven't seen literally in a generation. The factors driving the recovery are numerous. We have fiscal policy that is off the charts, right? Stronger than any time since World War II. We have strong monetary policy. They're both big and coordinated, and they're not just in the US, but they're global. So that's big. Obviously, the vaccine and the pent-up desire to return back to normal, particularly in terms of consumer spending on services. And then you look at consumer balance sheets. Consumer balance sheets are way better than they've ever been in any other economic recovery, meaning consumer savings actually went up during the pandemic. Home prices went up, net worth went up. And so consumers both have the confidence and the ability to spend. And so I think we're going to see GDP numbers that are really blowout this year, 6, 7, 8%, maybe on a real basis. And then that's going to translate to earnings, because in the early stages of an economic recovery, we usually see great operating leverage as companies hold the line on costs and yet get the incremental revenue. And so we see margin expansion typically. And so I think we're going to see really strong earnings this year. And that's why you're seeing such a strong stock market, quite honestly.
And this has been the consensus idea throughout 2021, with a lot of people talking about this rotation into cyclical stocks, into consumer discretionaries. And yet there was a recent survey done by Bank of America that showed that hedge funds have actually shied away from going full on into the reflation trade. They're actually sticking with more of the haven type stocks. Can you explain the thinking behind a trade like that? Does it just not make sense at this point in a credit cycle or an equity cycle?
Well, we've been saying since October that we're going to see a strong rally in cyclical value stocks. And certainly since the announcement of the Pfizer vaccine back in November, that's what we've seen. And the fact that hedge funds have been hesitant to get on the trade just tells me that there's more room for the trade to go, that there's still money on the sidelines that hasn't plowed into the trade yet. And so therefore, the trade continues to have legs. And by the way, that's right in line with history. We've studied all the recessions going back 40 years, and every recovery, every single one of those recoveries, cyclical value stocks have outperformed over the next 24 months. So I think this cycle is right in line with prior ones in that sense.